Okay, hey guys, how you going? Hope you're having a fantastic Friday. I'm here with James from Escott, and he is one of our accountants that we use and refer a lot of our clients to. So he's just going to have a bit of a chat today. It's absolutely tax time. I'm sure you all know that, especially if you've got a rental property, waiting to get some of that cash back to help out sometimes. So James is here, and we're just going to have a bit of a chat together today about some things that to make sure that you are claiming on, and just some tips for tax time and a bit of information. So thanks, James, for joining me and having a bit of a chat.
Hi, Jacqui. Thanks for having me. There's obviously tax time's started a couple of days ago, so it's all full swing for us.
Yeah, you said it's been pretty crazy and a bit hectic.
it has been, yes, leading up to 30 June with the COVID and all those other bits and pieces that have been happening in the world.
Yeah.
But also trying to get the most we can out of deductions and whatnot for claiming of rental and other bits and pieces for tax time.
Yeah. Yeah, it's been a bit of a crazy time, a bit different this year with everything going on. So there might be a few different things that people need to think of with tax time. I think you mentioned as well, with people having worked at home, and there might be things that they can claim there as well. So
there are a lot of changes in that area. Yep.
Yeah,
So,
investment properties, but yeah, definitely something to think about as well.
Yeah, we can touch on those a bit later on, but I guess we can focus a bit more on rentals.
Yeah.
For the time being. Obviously, the changes that have been in place for the last, since March, I guess, with COVID, might change the landscape a little bit in regards to how your rentals behave for you. It might have, you might be in a position where your rent has been reduced or put on hold. I guess from a tax point of view, you only need to record the rent you've received for the year. So if that's for that period of time hasn't been received, then it doesn't fall into the 2020 financial year. This might increase your claim for the year because on the flip side of that, we can still claim all our normal deductions in regards to the rental property if it was available for rent at that time.
Yep, cool.
So I'm not sure if you've had a few that have with tenancy issues and stuff like that, but
only a small handful actually. We've been really lucky in that not a lot of our tenants have been affected, but also in that our tenants have been really great at communicating with us and letting us know. So we've been able to put plans in place and things. I think some places, in some examples, some people haven't contacted their property managers and things like that, and so it's blown out, and that's where it's become huge problems as well. So we've been able to work with our clients and our landlords and negotiate that type of thing and work with them. So yeah,
we found that we find that with the ATO as well. Sweeping things under the mat doesn't really help. The more open and on the front foot you are with those sort of things, debts and interest and all that sort of stuff with the ATO or lodgement even, the more proactive and contact you have with the ATO, the better off.
Yeah. Sometimes we got to go back to our childhood and remember what our parents told us to be honest all the time.
Yes, it is. It is hard in some instances. You don't want to. Easy to bury your head in the sand and forget about it, but it will come back to get you at some point.
Yeah. There's definitely some of those things in life that you just go, oh, I just can't be bothered dealing with it right now. And
yes, and the ATO progressively improving all of their traps and areas that they can. With modern technology, it's a lot easier for them to find you and
track everything as well.
Correct.
Yeah.
A lot more gets reported directly to the ATO these days, which helps them, I guess.
Yeah, and I suppose that's another reason for people to have a good accountant, especially with rental. If you had a really basic job, you didn't have any investments and things like that, maybe you could do your own tax, but having an investment property and having investments and things like that, it sort of becomes really important to have a good accountant to make sure that you are, one, getting back everything that you possibly can, and not, paying out more than you have to, but making sure that you are covered for all of those things. You don't want to be getting in trouble for just being naive and not knowing So having someone to chat to and to give you advice can be really important.
Yeah, and that's obviously what we try and help you with, is obviously claiming every deduction we can, but also making sure we're putting in all the income we need to as well. And that can, that's the ATO have flagged a few hotspots this year in regards to rental properties. It's one thing that's on their list this the 2020 financial year, because they have done a bit of a blitz on it in the past and found that a majority of the returns that they're looking at are incorrect. So they're sort of focusing a little bit more on the rental property area this year.
Yeah.
I guess I've got a couple of key points that sort of flagged is interest. Is one thing where you've got a loan that might not be 100% for the rental property. You might have drawn down on it for a private car or a holiday or something along those lines. We've just got to remember we need to apportion that interest. We can't claim it 100%, even though it's secured against that property.
Yeah.
The other issue with the interest side of things is if the property isn't genuinely available for rent, then we might need to apportion the year, not a full 12 months worth of interest. It might need to be brought back a little bit, or if it's a holiday rental or something along those lines, we use a bit for private use.
Yeah, holiday rentals have changed quite a bit this year. I think quite a few of the holiday rentals have actually gone to full-time managements just to stay afloat for the next 6 or 12 months. Things sort of calms down. Although we've been very lucky in Adelaide, I think that's definitely been a saving grace for some, that they've switched over to the full-time managements just for a short time, and then they can switch back. It is getting back to normal, but we still don't have a lot of interstate and overseas people coming through, so that definitely makes a difference with holidays and things. So
it is going to slow it up a bit this year, I think, with the interstate and the international travel not coming in. But hopefully there'll be a lot more travelling locally.
Yeah, that's it. Yeah, and I think there is. I mean, I know quite a few friends and things that have been travelling and that. You mentioned about the mortgages and refinancing and things like that. Is that something?
Yeah, that's another thing that we sort of touch on. It's not tax related, obviously, but now with pretty low interest rates, it's a good time to just check those things in regards to what your current interest rate is. Is it competitive? Can they do better? A lot of times it's just a matter of a phone call to the bank. Just ask a question. They can only say no, or alternatively look around, shop around and see what you can find. That also goes for insurances, all of those things that normally tick over from year to year, and you just take it for granted. Unfortunately, being loyal these days doesn't always give you the best rate.
No, you sort of get those letters in the mail that, it's gone up by this little tiny bit this year, and you sort of just go, well, it's not much, all right, and don't really look much into it.
Correct, yeah. But if you jump on the phone and just ask them, they can only say no, But a lot of the time it might be something in your favour. So it's worth questioning.
Yeah, well, I know that I was speaking to Dion, a loans person from ANZ, and he said quite a few clients have come to him and asked him, what can you do for us? Because their bank is saying no, and they're going, well, I think we can get something better somewhere else. So they've jumped on to not saying, ANZ is your only place to go. There's, you've certainly got to look around for your particular situation. But in this particular instance, Dion at ANZ was able to save them quite a bit of money. I can't remember the exact figure, but just because they shopped around, even though they said no.
Yes. And obviously it'll reduce your deduction for the year, but in the long run, it's going to save you money. So it's definitely worth doing. Yeah,
and I suppose that's the thing, and I imagine you agree, with investment properties and things, majority of the time, it's long-term goals. They're not, buy something and 2 years later sell it and make a profit.
The tax advantage is one thing, but also the capital gains is another. So you've got to look at a rental property as a whole picture, not just the short term, what it can save you in tax.
Yeah, absolutely. Was there anything else that you wanted to cover on?
There were a couple of other areas that they've flagged. Basically, very simple in terms of capital works versus depreciation. Treating that correctly is an area that they've highlighted as something they're going to look into. no longer being able to claim travel costs. That's been out for a number of years now, since July 2017, I believe. But I think that's still being reported. We can no longer claim travel costs to visit our rental properties or check up on them, which is a bit disappointing, but it is what it is. The other thing is the sharing economy and bits and pieces like Airbnb and the like, where the income's coming in, not being reported on the tax return, which there's a lot of that being reported to the ATO, and I don't think the taxpayer realises that.
Yeah. Yeah, okay. Yeah, like you said, they're cracking down on things a bit more now, and you've got to be careful. Yeah, doing anything and not get caught out. So.
Yeah. But I guess other than that, I mean, the rental property side of things is reasonably straightforward, and you just got to obviously make sure that you have your receipts and bits and pieces for repairs. Make sure that the property is actually available for rent, which is generally easily justified if it's with an agent or along those lines. We need to be able to establish that it was available and out to the public for the full year, in order to claim the whole period. Otherwise, we need to apportion.
Yeah. And I suppose that's where having an agent can be helpful as well, in having that. We will look after all the maintenance and all that sort of stuff, so we compile all that paperwork and basically print you out a couple of pieces of paper to give to your accountant, and to give to you guys, and that's consolidated, nice and easy. You don't have piles and piles of receipts and things.
It makes our life easier, and I think the landlords as well.
Yeah. So it's just so it's all printed out and nice and easy and compiled. Something we do at the end of the year for our clients, so it's nice and easy for them at tax time. Tax can, so it can be can almost be one of those things that you go, oh, I'll do it later. But when it's all compiled, it makes it easy. You can do it quicker. Yes,
exactly. Takes a burden out. But obviously, things to, I guess, remember in regards to your rental property, if you do putting things together for your tax agent or preparing it yourself, some common deductions that you want to make sure you're getting the best claim you can. Obviously, advertising for tenants. If you had to change tenancy during the year, we need to advertise. 9 times out of 10, if it's done through a management team, you'll have those costs for them. But obviously, the letting fees as well, in regards to the releasing and letting, if that term is up, body corporate strata fees, they're all tax deductible. Borrowing costs, if we if you ever refinance that loan, we can the costs associated with that can be written off over a number of years, depending on the situation. Cleaning, and then gardening, those sort of things. Your council rates, your water rates, emergency services levies, insurances, all of those sort of things. We want to make sure we're picking up so that we're including them in return.
Yeah, cool. Beautiful. Is that's pretty much what you wanted to sort of have a chat?
Yeah, and obviously, if you've got any questions, there's situations where things change. Like I said, COVID might have thrown you a few curveballs this year.
Yeah.
If you have any questions, that's where an agent can help you in regards to what you can and can't do with it, and what you should be claiming.
Yeah, absolutely. Yeah, so guys, if you've got any questions for either of us, please give us a call, send me an email, comment on this post, and we'll get back to you. More than happy to give you any advice if you need some, or pass on the details. If you don't have an accountant, the guys at Cotton Escott and James, they're absolutely fantastic, lovely people, really relatable, and that's part of the reason why we refer onto these guys. They do us a good job, and they've done a good job for our clients who have passed on. So thank you so much for coming and having a chat with us.
Thanks for having us, Jacqui.
No worries. We'll speak to you soon, guys. Bye.
See you later.